The title of the video is how to trade the economy news using the wave principle. How to trade economy news using the wave principle. All right. There are many ways trader can trade the economy news. Okay, I have recorded a video that I posted at Joe Trio channel about trading the non-farm employment change, and we were using the MACD indicator, and one will enter the trade 1 minute before the economy news is released. In this video, I want to share with you trading tips that one can use, okay, to trade the economy news or to forecast, okay, the next price move at the time when a major economy news is released. Before I continue, I would like to say to traders that this video is for educational purposes only. It is neither a solicitation or an offer to buy or sell any financial instrument. All right. If you want to know more about Elliott wave trading, go to www.24elliottwaves.com or go to our YouTube channel for Elliott wave trading, youtube.com/user/24elliottwave, 24elliottwave channel. For all trade, we must use the 5% money management rules and apply stop loss in all trade. All right. So how do we trade the economy news, using the wave principle? I want to stress that this method, we will apply it for major economy news, like especially the non-farm employment change, major high impact economy news. If you go to www.forexfactory.com, they have a system for labeling the economy news. The high impact news is the one that we have the red envelope for. These are high impact news like the GDP release, the ISM. These are high impact news, the non-farm employment change, the ADP non-farm change data. These are high impact news. So when we are trading a high impact news, we can use the wave principle, to make excellent decisions. All right. So yesterday was the non-farm employment change. All right. And looking at the euro Australian dollar on the hourly charts, I have counted 5 waves. The first wave from here all the way up here, second wave from here down to this point, the third wave from here all the way up here, and the fourth wave from here down to this level, and the fifth wave here, followed by 1, 2, 3, 1, 2, 3. This is a double retracement. The first thing that is coming to our mind when we are talking about a double retracement, we are thinking of which pattern? All right, the flat correction. So the Elliott wave pattern that we will use is the flat correction. The Elliott wave flat correction allows traders to forecast, major economy news. Now, before you get too excited and thinking of using it like a money printing machine, I have a warning for you. The Elliott wave principle is a guidelines, is a theory that allow us to navigate through this messy market. It's not an exact science. It's giving us a warning. It just say, George, watch out. There is a high chance that the price may go down here. There is a high chance that the price may go up here. There is a high chance that the price may go down 1, 2, 3, 4, 5. All right. So this is how we use the Elliott wave. Another thing I need to say to traders, when we are using the Elliott wave, we do not want to violate the market pattern, rising channel, declining channel, and the horizontal channel, and we want to apply the trading drill, the setup, the signal, and the low risk entry point. You can know about Elliott wave, you can master Elliott wave, but if you are using Elliott wave and you are constantly violating the market pattern, or you are not using the trading drill, you are likely to make a lot of wrong, you are likely to make the wrong decisions. All right, so this is the warning. All right, I hope I get your attention here. If you are watching this video, remember what I just said, so you do not use it like old-fashioned traders, okay? So I have counted my 5 waves up to this point, and I have seen a double retracement, and the first thing that is coming to my mind is the flat correction. I will not go into the detail about the flat correction. I will refer traders back to 24 Elliott Wave YouTube channel. All right? Okay? So the flat correction, I've seen a double retracement here. And you see this turquoise horizontal line here. I have noticed that exactly here, this is 8 a.m. Eastern Time. Look at the top left-hand corner of my screen. You will see Friday, 8, okay? Can you see your chart? 8, 1, 14, 08, 00, 00 a.m. Can you see it right here? Look here, this session here, okay? Just keep your eyes there. You'll see there, Friday. That's it. 8 a.m. That's 8. The first 8 is the August 1st, 14. The time 0800 a.m. Or you see it on the top left-hand corner. So this is 30 minutes before the non-farm employment change is released. All right? 30 minutes before the non-farm employment change is released. And this is the non-farm employment change. So as counted my 5 waves, all right, 1, 2, 3, 4, 5. I see a double retracement, 1, 2, 3, 1, 2, 3, right here at 138% Fibonacci extension level. Now, the information that the wave principle is communicating to me is telling me that, George, the Euro-Australian dollar, technically speaking, has a high chance to go down in 5 waves. Now, we will not ignore the economy news. We will not ignore the fundamental. Remember, it's not a science. But I have a warning. So I will not, it's like you're in a building, all right? The fire alarm starts ringing, all right? Even if it's a test, until they tell you that it's a test, you take it seriously, yes or no, all right? So it's a warning. So a warning, we will not disregard it. You are driving, okay, you see the sign, it's a bendy road, it's security sign, you will not ignore it. So you will acknowledge the warning. The same thing when we are using the Elliott wave principle or the 13 specific Elliott wave patterns, these are giving us a warning. But the mistake that traders are making is that they take the warning as the signal or the entry. Remember the trading drill and the market patterns. All right. So though I have counted my wave on the hourly chart, I didn't come to the hourly chart straight away counting my wave. We do not use one single time frame to count waves. A wave, okay, a minor wave on a lower time frame, okay, so a multi-wave on a lower degree can be a single wave, all right, on a higher degree, all right. This is about multiple time frame trading, a fractal nature of the wave patterns. Okay, so though I'm on the hourly chart, I do not use the hourly chart alone. I don't want the video to be too long. So I have seen here, 30 minutes before the non-farm employment change, that this pair has a high chance to go down. So I will be, okay, a little bit bearish towards this currency pair. But remember, the euro dollar is what we call the leading currency pair. So the next thing I need to check is so if I know some traders may disagree with me, feel free to disagree, which is normal. This is what YouTube allows us. You disagree, put your comment below. You have something to say, say below. All right, that's your view. But anytime I'm counting wave, that's my wave count, okay? All right, now, so at this point in time, I'm thinking that there's a high chance that the euro Australian dollar will go down. But I also know, talking about my own understanding of the correlation between currency pair, that very often this pair, the euro Australian, will go against the euro dollar. It's not always the case, but sometimes you'll see that. This is why I say to you, you will disagree with me. So bang the table. You don't smash your computer though. So because I receive a warning here that the euro Australian dollar has a high chance, okay, to go down, the first thing that is coming to my mind, talking about the correlation between currency pair, I'm thinking that there's a high chance that the euro USD, this is the euro USD, has a high chance to go up at the time when the news is about to be released. The same thing that is coming to my mind, because the non-farm employment chain is U.S. economy data, okay, talking about non-farm job creation, United States. So if the Euro USD, which is the leading currency pair, has a high chance to go up, the next thing that is coming to my mind is that the crazy currency pair, which one? What is the crazy currency pair? The dollar yen has a high chance to go down, because if the Euro USD is going up, it's telling us that the dollar is weakening, okay, and the euro is strengthening. So Euro USD has a high chance to go up. The next thing coming to my mind, there's a high chance that okay, the dollar yen has a high chance to go down. Now, with that information, okay, there is a high chance that the non-farm employment change will be bearish. This is how we can use the wave principle to trade major economy news. All right? It makes sense? It is also powerful. So you have to understand that I have started everything with a wave count for the Euro Australian dollar. I have seen a double retracement. The pattern is not completed, but the pattern is underway, giving me a warning for the Euro Australian dollar, that the Euro Australian dollar has a high chance to go down. I deduct from that straight away that there is a high chance that the Euro USD will go up. I also deduct from that straight away that the dollar yen has a high chance to go down. So dollar yen has a high chance to go down. I'm thinking that the non-farm employment chain will be bearish for the dollar, which means the actual figure for the non-farm employment chain will be lower, significantly lower than the forecast. It makes sense? It makes sense? So if you are a new trader, you may decide to replay this video. If you have any question, put it below. All right. If you are TSTW24 trader, you may contact me. And okay. So, but do not ask a question about something that I have already answered in the video. I don't like that. Okay. So if you ask a question that I have already answered in the video, I will not reply to the email. Okay. So you know straight away. So if I don't reply to the email, you know that you have to go back and watch the video. Okay. So that will save me time also. Okay. So this is how we can use the Elliott wave, okay, principle to trade major economy news. But you have to understand that in this case, we do not want to quickly go and splash trade. So you want to control the risk. What has happened is that I sold already the Euro Australian dollar, okay, and I also buy the Euro USD, and I also sell the dollar yen. But at the time when the news was approaching, I was thinking that suppose I was completely wrong, okay, that I'm completely wrong, which means that all the trade will go against me. So in order to control the risk, I decided to close the Euro USD trade and to leave the Euro Australian trade on, and also the dollar yen trade on. So when you are using this method, you want to also think of how you control the risk. So first, you are using the 5% money management rules, and at the same time, you are controlling the risk. You want to see how much stop loss you are using. You don't want to go and gamble it, because it's trading economy news is very, very risky. You may decide to trade only one financial instrument. If it works, it works. If it doesn't work, it doesn't work. But you will not feel bad about it if it happens to be a losing trade, because you just follow the information that the price is giving it to you. But as always, you use the trading drill. So from the hourly chart, you switch to a lower time frame and zoom into it and watch either, okay, the price itself or the market pattern at the time when you're about to enter the trade. To summarize this video, you can see that with the flat correction, the Elliott wave flat correction, if we see a double retracement, okay, at the time of a flat correction, at the time when a major economy news is due, we can deduct, okay, the possible direction of the economy news. With this example, everything has started with the Euro Australian dollar. I have seen, okay, a double retracement on the hourly chart, all right? It can be on the daily chart, okay? But on the hourly chart, this is a short term. I've seen, okay, because a news is about to release. We are focusing on the short term, what is happening. On the hourly chart, see a double retracement. This is where I draw my vertical line. I'm expecting this pair to go down, which it went down. You see, as the news was released, this is what has happened. It went down. All right, took my profit straight away. It bounced up and retested here. There's a high chance the price will continue to go down. But remember, you want to buy, you want to sell. If it goes back and finds a support above this resistance, you don't want to fight it. So do not use this video as a sell signal. All right? I recommend to trader to watch the video that we call the power of the stochastic pattern that we have posted at Job Trio channel. All right? So with this information, I knew that the euro Australian dollar is likely to go down. I deduct that the euro USD is likely to go up. I also deduct from that the dollar yen is likely to go down. The dollar yen is likely to go down when a major US economist is telling me that the economy news is likely to be bearish. Now, I must control the risk. I must manage the trade. I must, avoid being too aggressive and say it's definitely going to go down. No, there's nothing like definitely. All I know is that there is a high chance. All right, more than 70% of the time, it's a high chance that if everything is okay, all right, it will work beautifully for me. And it has worked beautifully because the dollar yen also went down. Where is the dollar yen? Crazy currency pair. I want to show you for all trade. So, though I did close my euro USD trade, you can see this is the dollar yen. It went down. Dollar yen went down. Euro Australian dollar went down, and the euro USD went up. I hope you have learned something from the video also, and we put into use, to make excellent decision. This is about how to trade economy news using the wave principle. I want to stress that we want to pay attention to the high impact, major economy news. Until the next time, enjoy yourself and be very happy. We are the TSTW and 24 traders. If you like this video, please give us the thumbs up. If you dislike it, give us the thumbs down, And if you have any comment, put it below. Any question, put it below. And your feedback is very important for us, to improve, our recordings. Thank you for watching, and we will speak to you very soon.